Hello, and welcome to another episode of the Market Pulse series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. So I'd like to begin by mentioning that this series, this episode, and all other episodes in the series do not represent any investment advice. We do not recommend any assets to trade. So it's purely educational, and once you join in, once you go through the content, always do your own due diligence to make your own investment decisions. So as we progress, I would like to begin first by thanking everyone who have been following these sessions, and also to notify you guys that this is the last session that I'll be doing this year. So as I had mentioned earlier in the week, the sessions that we've been doing are bound to end at the end of this week. I know tomorrow you'll be having Samson Zera doing the market snapshot. So thank you everyone, guys. Thank you for your time, and I appreciate everything that we have done together since we started this series. So if you've benefited from these sessions, I would like to hear your feedback right in the comment section. So after we go through this session, we'll have another one tomorrow, and that will be the end of the year for us. So for the Bullish Banter podcast, we have pre-recorded sessions that will be airing live on every Wednesday. So you will have sufficient content to take you through the holidays. And of course, once you get into next year, then we prepare more hot content, and hopefully we get to improve and bring you more versatility in the analysis, as well as the quality of content we receive. So hi Trapscade, hi new season, hi Takeout, and thank you guys. Thank you for joining the session. I really appreciate you guys. So now that we are through with that part, let's talk about the markets today and what we have been seeing happening around the markets. So I'll be starting with the key highlights for the day, key highlights in the markets today. So first things first is about crude oil. So WTI crude oil futures fell below $74 per barrel on Thursday, ending a three-day climb due to divisions within the OPEC. So after 16 years, Angola's departure from OPEC heightened concerns about organization's ability to stabilize global prices amidst disputes over oil production quotas. So that's the current big news happening in the markets right now, that Angola is moving out of the OPEC plus nations. So as we all know, OPEC is basically a cartel of oil producing and exporting countries, where they will basically delegate different quotas for each country in order to manipulate oil prices. So when prices are too low, they will limit their supply, and when prices are too high, they increase supply and get to benefit from high prices. So seeing Angola moving out of the OPEC plus nations basically shows that there is divisions within the OPEC plus nations. And as a result, we have seen increased bets that maybe Angola will flood the market with excess oil. And this being negative news for OPEC, we saw oil prices weakening. So remember, for the better part of the week, the bull market in the oil prices has been sponsored by the Houthis. And these are the guys who have been attacking ships along the Red Sea. And as a result, they have halted business for a majority of the top shipping companies in the world, including BP, Shell, Maersk, and so on. So we have had news that have been supporting oil prices to the upside, and this is after the disruption of the transport route via the Red Sea, and now positive news after Angola moved out of the OPEC. So as a result, what we are seeing in the markets is oil prices that were significantly strong and bullish basically turning bearish, and this is according to a pattern on the forward chart that has been acting as our resistance line. So for anyone who is looking at the charts, should be able to observe this easily. So clearly, it was a market that was respecting this line as a major resistance line. So last week, in the second half, we saw oil prices recovering. And then this week, we have had some good bullish momentum. So for Monday, Tuesday, Wednesday, we have seen upside momentum. But then today being Thursday, we can see oil prices moving back downwards. So while on one hand, whenever we know that a trend line has been broken, it's common for the markets to pull back, retest the trend line before continuing. And this one seems to be playing out after the market broke the trend line. And this was on Tuesday. On Wednesday, kept going higher. And then on Thursday, we have seen the market pulling back and retesting this trend line. So there is a good chance that oil markets will remain bullish because the Red Sea news are bigger than Angola. So in this case, there's an expectation that oil prices continue the recovery journey and maybe we'll be seeing a bounce from this current price level. So from the 15 minutes chart, this is how it looks like. So after the break, eventually some form of pullback, market bounces strongly from this area. And as you can see, there seems to be some momentum coming into the market. So potentially bulls could be driving this market higher. So that's one of the key observations in the markets today. So speaking of a retest, I think there's another chart that I saw basically showing some form of retest. So I'll be trying to find it right now. A trend line that has been broken and then retested. I think this is Audi USDS. So we had this chart earlier in the week where Audi USD was trading sideways for 3.5 days before it broke towards the upper side on Tuesday. So on Wednesday, which is yesterday, we saw the market pulling back, retesting the support area, and then bouncing strongly with a strong bullish momentum. And now this is what we have in the charts. So clearly a breakout, a retest, and a continuation. So I expect Audi USD to continue with the bullish momentum that we're experiencing here for the week, with the target being 0.68180. So there's still more room for upside momentum for Audi USD traders. So as we continue with today's presentation, we also look at other news currently happening in the markets. So besides the oil news, there's of course a summary of what has been happening in the US. So we'll be going through a very short article here. So the American economy expanded at an annualized 4.9% in the third quarter of 2023, which was slightly below the 5.2% recorded in the second estimate, but matching the 4.9% initially reported in the advanced estimate. It still marks the strongest growth since the fourth quarter of 2021. Consumer spending rose less than initially anticipated, 3.1% versus 3.6% in the second estimate, but it remained the biggest gain since the fourth quarter of 2021. The slowdown was mainly due to services spending. Also, private inventories added 1.27 percentage points to growth, below 1.4 percentage points in the second estimate, and both exports 5.4% versus 6%, and imports 4.2% versus 5.2%, increased less than initially anticipated. So clearly, we are seeing the US economy now beginning to slow down after a record growth in the previous quarter. So now dropping from 5.2% down to 4.9% as expected. But then seeing private inventories weakening, as well as exports weakening, and also imports weakening in the US, basically means that the economy is beginning to slow down, and this is consistent with the Fed's expectations. So on the other hand, non-residential investment was revised higher to show a 1.4% rise versus 1.3% in the second estimate, as investment in structures surged way more than expected at 11.2% versus 6.9% expected. So both residential investment, which was up 6.7% versus 6.2% expected, the first rise in 2 years, nearly 2 years, and government spending 5.8% versus 5.5% expected were also revised higher. So with a much weakening US economy, it means that the Fed's expectations are being met, and the likelihood for an early rate hike is in the books. Sorry, not rate hike, but rate cut. So analysts are basically forecasting a potential rate cut in early March. So in this case, we could be seeing things happening as is. So from the Fed rate cut chart, that is the CME Fed Watch tool. We basically watch the 30-day Fed funds futures to see a projection for interest rates. So for the next meeting, we expect interest rates to remain the same, and this will be on the 31st of January, where we are seeing an 85.5% possibility that the Fed hold in interest rates at the current level. However, for March, and this is the 20th of March, there is a 71.3% probability that the Fed will eventually cut interest rates down to between 5% and 5.25%, and that will be a 25 basis point cut. So if that is implemented, then the market is already pricing that in. I'm sorry, I wasn't sharing the screen, so now I believe I'm sharing. So on the month of March, the 20th, we are already pricing in a 71.3% possibility that the Fed will cut rates to 5% and 5.25%, and a 17% chance that the Fed will hold interest rates at the current level. And of course, there is room for a bigger rate cut, maybe 50 basis points, which has an 11.6% probability that it will drop to 4.75 to 5% in the US. So with that being said, it basically means that investors are already betting on a weaker dollar following potential rate cuts. So from the dollar index, and what we are seeing is some further weakness. So for the better part of the week, it seems that the dollar has been pretty weak. So having opened the week on Monday here, trading sideways, broken to the lower side on Tuesday, retested on Wednesday, and further downside momentum on Thursday, I expect to continue seeing a much weaker dollar. So sorry, this is a weekly chart. Sorry, this is the 1 hour chart. So I think this is correct. So from the 4 hour chart, it's a strong bearish momentum. So with the dollar being weak, we are seeing the weakness being reciprocated in other pairs. And in this case, we are seeing the Japanese yen continue to strengthen against the dollar. So despite earlier in the week, where we saw the JPY weakening after the Bank of Japan decided to hold interest rates steady at negative 0.1%, we didn't see a breakout of this trend line. So eventually the market made a reversal here. That was on Tuesday, Wednesday further downside momentum, and Thursday further downside. And now it seems like as we head into Friday, we could be seeing a further drop that would potentially test the 141.387 price level. So there's still more room for downside momentum for the USD JPY currency pair. So for other measures, we are seeing the euro now strengthening against the dollar after having an initial drop towards the end of last week. So this week has been pretty bullish for euro USD. And from the 4-hour chart, this is how it looks like, a market that is looking to break above that level. So right now, as we speak, it's still having some upside potential. It could potentially hit 1.10156. And of course, if we happen to see a break, then now we start projecting for higher prices. So for pound USD, which had a big sell-off yesterday, now we are seeing some form of recovery, and perhaps we could be seeing the market making a rally and eventually getting to 1.27, 172 following a much weaker dollar than expected. So for USD CAD, the dollar continues weakening against the Canadian dollar. So from the 4-hour chart, you can see the big sell-off happening here. We have already broken the previous target level, which was a major support area. And now we could be seeing some much lower price action. Of course, the immediate target remains the previous low. So a potential drop to 1.32616 for USD CAD currency pair. So as for gold, we have continued to see this pattern playing out here. After the market made a big spike upwards and then has been trading sideways for a while now. So if I remove all these accumulated buyers, then now we can have a much more objective view of the gold price, especially after the big spike that happened last week and the big sideways momentum currently continuing. So from the previous high, you can see that this is a major trend line. Then from the previous low, you can see that this has been holding as a major support level, and the market is trading within that triangle. So with this in mind, you can see that gold is already rejecting that upper trend line. So if I zoom out and change to a 15 minutes time frame, then you can see that the market is currently testing this upper trend line. And if it fails, then the potential might be seeing the price dropping back to the lower trend line. And then, of course, eventually there will be a breakout. So we patiently wait to see the breakout, which would inform the next direction of trading. So notice the previous time we had such a pattern, there was a breakout towards the lower side, and immediately after the breakout, there was a 3-day drop in gold prices. So in this case, if we happen to have a breakout, it would inform the direction of trade, and perhaps if the breakout is to the upper side, then we could be headed higher to a price level of about 2071. So we have already checked out our USD, and we have seen that there is a good possibility of some further upside potential. So 0.6818 remains a target. So yesterday in the evening, we had a big drop happening in the Nasdaq, basically erasing a few days gains. And then today, we saw the Nasdaq being pretty resilient, making a very strong rally since the open of the day. But once we got to this previous high, the market found a strong resistance around 16,765. And since then, it has been changing direction and moving back downwards. So from the 1-hour chart, this is how it looks like. So now there's a potential. We could be testing the day's low at 16,546, having failed to make a full complete recovery. So there is a good chance we'll be seeing some further downside, and this is also true in the Dow Jones, especially after the big rejection candlestick that we just saw here, which is indicative of a strong bearish momentum, and now we could be seeing the price moving back downwards. So I'm trying to zoom out to try and understand the previous price levels, and as you can see, the big trend line that I have here, the horizontal one, marks the previous all-time high. So in this case, now that we are seeing price moving back downwards, the new target becomes 36,955, or basically the 37,000 price level. So expect the Dow Jones to continue the biggest sell-off, and I think this is the strongest trade idea we have for the day. So after the US 500, after that, the US 500 is also dropping, so we're also observing the day's low. So the day's low is all the way down, and it seems to be coinciding with the previous low here. So in this case, this becomes our new target. So I expect the S&P 500 to continue dropping and eventually get to this support area here. So as for Brent oil, we saw the market breaking this particular trend line. So on the 4-hour chart, we have already discussed this. So after the big break, the market has pulled back downwards and seems to be finding some good support here. So I'm still very bullish on oil. I believe the Red Sea news and the disruption caused by the Houthis is much bigger than the news about Angola. So in this case, we could continue seeing oil prices moving to the upside because the Red Sea area is still not stable and ships are not currently moving through it. So as a result, we could be seeing scarcity in oil delivery, and as a result, higher oil prices. So in this case, I'm betting that we could be seeing some further upside in Brent oil prices. So European equity indices, in this case, we had a diamond forming on the France 40 index. The market managed to make a breakout, and this was yesterday in the evening. So today, the market has retested that area, and now we are on course for a continuation. So I expect to see a continuation of the direction of the break, in this case, a break down below. So as for the Euro 50 cash index, we had the head and shoulder pattern completed. The market pulled back and now formed a new trend line that is now following a path along this area here. So after forming this, now you can see we have a sequence of lower highs, and lows are getting lower, meaning that the trend has now changed. And now we start looking for positions that are on the selling side. So in this case, for short selling positions, there seems to be a possibility that we see some further downside from the Euro 50 cash index. So as for Bitcoin, we had a strong rally happening early in the week, but then the highs we are seeing today basically form a double top formation. So for those who are familiar with the double top formation, it's when the market is unable to form or to break a certain level. So market moves up, finds resistance, goes back, and then up, finds resistance, and then back down. And now we start seeing the potential for the market reversing and moving back downwards. So for Bitcoin, if we happen to break the below the 43,448, 458, then we should be seeing some further downside momentum, perhaps to 41,424. So as for New Zealand USD, basing that on the correlation we have seen with the Audi USD. This was a sideways momentum. So if I was to change this and show you the average price action for the last, I would say 4 days here, this was the average price action. And then a breakout happened on Tuesday, followed by some further upside momentum on Wednesday. Market pulls back on Wednesday evening, and then on Thursday, we bounce from here. So this is the breakout, a retest, and a continuation. So I expect to see some further upside happening in New Zealand USD currency pair. And of course, the next immediate target remains 0.63767. So as for the dollar against the Swiss franc, there's still more room for downside momentum. So as the dollar continues weakening, the Swiss franc is also benefiting from this. And now we are on the verge of breaking the lower trend line. And of course, besides the lower trend line, there's also a major support area here at 0.85537. So in this case, if we were to use a smaller time frame, such as the 1 hour chart, there seems to be some more room for downside, and we could eventually get to 0.85537. So it seems to be a pretty strong bearish momentum where the market keeps on pushing and the pullbacks gets smaller and smaller, indicating the strong strength of the bearish momentum. So as for pound yen, it's also losing to the yen. So as much as the yen is gaining against the pound, it's also gaining against, as much as the yen is gaining against the dollar, it's also gaining against the pound. So in this case, we have this formation where the market happened to bounce from this area twice, but then notice that in this case, we didn't quite get to the previous high, and the market is now pushing back lower. So in this case, the potential for further downside momentum in pound yen remains quite significant. And if we manage to break below this support, then we could be seeing some further downside momentum. So it's important to notice that this is already a strong enough support. So it's a key decision point. So if we happen to see a bounce from this area, then the pound could rally back and get to 181.68. But then the stronger likelihood is for the continuation of the momentum and getting down to 178.554. So I'm seeing quite a number of commentary. Hello, Tony, and welcome to the session. This is a comment from David Moiro. Hello, Rufas. I want to express my appreciation for the educational journey you have taken me through the field of Forex trading. Thanks to you, I've been quite profitable. Thank you once again. I appreciate you. This is what drives me forward, as well as my team. Having seen traders begin this journey, commit to it, commit to the discipline, strategy, and turning up every day. And once you get profitable, it's my entire joy. So if you made some good chunks over the year, make sure you enjoy your holiday and be prepared for the new year. Do you enter a trade immediately after news, or do you wait for a while? I wait for a while. I want to do a couple of things. One, I want to see the news outcome. I want to see the news outcome, compare with the previous data, and of course, compare with the projections in the market. And two, I want to see how the markets are reacting to the news. So I don't want to just jump into, after seeing this is the new outcome in the news, buy or sell. No, I want to see how is the market reacting to this. And then three, I want to know the price levels. Have my price patterns been broken? What are the new targets? What is the technical analysis showing me? So once I consider those things, then I'm able to identify a potential market opportunity. There's also a comment from Tony. Truth be told, I have the best mentor in the game. You, ever since I got a job and got exposed to people with influence, who influence my trading. Thank you. I appreciate you. I hope you finally turned profitable. Another comment here, I've succumbed to losses. I'm looking to correct my mistakes with these consistent webinars from January as I get my pay. Thank you. I always advise my traders to at least have a secondary or a tertiary source of income so that you don't project all your needs and bills to your trading account, and that makes it easy to approach trading. Hello, J Squad, and thank you for joining the session. Takeout, I started trading a few months ago, and since I started, I've always watched the market snapshot. It has helped me become a profitable trader, and I've been able to understand the markets clearly. Thank you. This is very much welcome. I appreciate the feedback. Thank you so much, Rufas, for everything. I really appreciate you a lot. Thank you, Charles Mukua. I would like to know which trading platform do you use? I use the MetaTrader 5. I've only used 2 trading platforms in my life. I started with MT4, and once they introduced MT5, I switched over, got to MT5, and so far I've never had a problem with it. From J Squad, my gratitude to Mr. Rufas, since knowing him in the days in scope markets, his former ground. I chose to move to wherever my mentor is. I'm truly grateful to you. I'll follow your lead. Thank you. I appreciate this. From Drip Sketcher, this year has had tough times, and you have equipped me with knowledge, and I want to thank you as we continue the journey next year. So thank you. Thank you, Drip. I really appreciate this. Hopefully, you've been able to make something for yourself from the markets. If you didn't make money from the markets this year, know that the next year will be there and the year after that. So just be patient and focus on improving each and every day. What's your take on PCA data being released tomorrow? I'm very positive that US inflation is on a path downwards, and that being the Fed's favorite inflation data point, basically means that a lot of investors will be looking to react to it. So if it comes in weaker than expected, then it should be able to drive the dollar much lower than the current levels. And of course, we could be seeing US equities reacting and forming new highs if it drops below expectations. So I think my biggest bet is on US equities. Given the strong rally they have had over the year, we could complete the journey with a good Santa rally, and one of the ways this could happen is if inflation is dropping lower than expected. So in this case, I'll be on the lookout. If inflation spikes higher, then that will change a lot of things. We could be seeing a weakening in equities and a strengthening in the dollar. So it was a good year. Thank you, J Squad. From Trapscade, thank you for helping me throughout the year. It has made me comfortable in the markets, and I hope 2024 I don't know what you mean by you will be around. Thank you. Yes, I'll be around. So thank you very much, guys. I really appreciate you. And this being the final day we are talking this year, make sure to check out the newest episodes of the British Banter podcast. I believe the last episode has some good topics on trading and what it is. I'm trying to search here and share the last episode. I believe it covers quite a lot. So it's a little bit different from the other episodes where we basically discuss markets and what's currently happening in the markets. But then in this newest episode, we basically talk about debunking a Forex trader's lifestyle. So in this case, we go through the ups and downs that Kenyans go through as professional traders. And this ranges from something as simple as being lonely in your own desk, focusing on the markets, or even having a secondary job, having, let's say, a lavish lifestyle versus a close, quiet, hidden lifestyle, or even just expressing yourself to people, trying to explain what you do for a living. Well, most people don't understand. Anytime they hear Forex, they basically associate that with their previous instances or stories they have had. Either they will be saying Forex is a scam, or they will be saying Forex is a gamble, or they will be saying they have been conned before. And this episode basically shares some light into that, trying to help explain the Forex trader's lifestyle. So thank you very much, guys, and I hope to see you on the next session. And that should be on the first week of January. So enjoy your weekend, enjoy your Christmas, and I'm very much more grateful for your commitment and for the feedback you have provided today. So thanks, guys. See you then. Yeah, secondary job, try and get a secondary job. If you can get the time that you normally waste waiting for your trade to materialize, and use that time productively, then it could develop a secondary source of income for you, and that will ease the pressure on your trading account.